Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video update for Monday, November 16. Investors have undergone mixed emotions over the past week. Euphoria over Joe Biden's win lapsed into despondency over challenges to the results, but then back to good cheer when those challenges fizzled and Biden won recounts. Same goes for the coronavirus. Optimism over the coronavirus has waxed and waned. Vaccine news initially cheered investors, but surging infections and deaths brought the mood down again. By the end of the week, though, the manic-depressive behavior finished on the upside. The S&P 500 last week posted a new record high, and global equities scored a second consecutive week of gains after news of progress in developing a coronavirus vaccine. Conditions already are in place for economic recovery. An effective vaccine would accelerate the rebound. Cyclical sectors that previously had been clobbered by COVID outperformed last week, while sectors that have gotten a lift from the pandemic, such as big technology, lagged the broader market. The high-flying NASDAQ composite paused for a breather, whereas the Dow Jones Industrial Average and the S&P 500 climbed. Take a look at the following table. Rotation also occurred among asset classes, with small cap and international stocks outperforming U.S. large caps. The surge in small caps is a sign that investors are optimistic about economic growth in 2021. The end to political uncertainty is a major tailwind for equities. However, a few clouds linger on the horizon. The Pfizer vaccine lays the foundation for beating the virus. But it's not a silver bullet. It will take many more months to develop a safe and effective vaccine that gets approval from the U.S. Food and Drug Administration. Even when the vaccine is ready, millions of Americans will refuse to take it, and distribution could prove a logistical nightmare. Paradoxically, news of a vaccine could undermine the COVID fight by making people complacent and less willing to adopt safety measures such as wearing masks and social distancing. That said, the Pfizer vaccine and other treatments in the pipeline offer a path to eventual normalcy. Momentum for the markets should continue for the rest of the year, but we'll experience considerable volatility along the way. Now that the tumultuous U.S. presidential election is finally over, investors are giving greater attention to the deadly coronavirus pandemic. Last Thursday, the daily number of new infections surged past 150,000 for the first time. Take a look at the chart. The U.S. is experiencing a third wave of coronavirus infections that's worse than the spring and summer waves of the pandemic. As hospitals throughout the country fill to capacity, the country faces a humanitarian crisis. The alarming spike in COVID cases will continue to roil the markets. The government reported last Thursday, though, that initial jobless claims last week fell to 709,000, the fourth consecutive weekly decline in the lowest reading since the pandemic began. Take a look at the following chart. That's good news, to be sure. The employment situation is improving. But, as you can see from the chart, it still has a long way to go. Reimposed lockdowns would devastate a jobs market that's struggling to recover. Many Americans who have been laid off will never get their jobs back, even after the pandemic is vanquished. One favorable sign, improving bottom lines. Third quarter corporate earnings are beating expectations, and they're expected to return to robust growth in the first quarter of 2021. So far, more than 80% of S&P 500 companies have surprised on the upside for Q3 by an average of 17%. That's really good news. Next year will likely mark the start of a new secular bull market, but we'll suffer coronavirus-induced volatility along the way. Well, that does it for now. If you have any questions, send your feedback to mailbag@investingdaily.com. I'm John Prasinos, wishing you greater wealth and good health. Thanks for watching.